Antes vamos a hablar un poquito de macro. Vamos a saludar ya a Kate Mead, is investment strategist in Alliance Bernstein Equities Business. Hello, good afternoon.
Hi there.
Thank you for being with us this afternoon. Last time we spoke, we discussed thematic investing. Is the new US administration, the Donald Trump government, bad for thematic investors?
Yes, you're right. Last time we did speak about thematic investing, and it's still something that we're talking about today. First off, we don't think that any administration will be all good or all bad for investors. There's usually a blend of positive and negative policies that can affect different parts of the economy and therefore our portfolios as well. So every government and every change in government has the potential to introduce policies that create uncertainty, like we've seen with the new US administration. And this time round is certainly no exception. And we have started to see some of that policy come through, but there is still some of that campaign rhetoric and narrative that's outstanding. We're not sure how much of that will be converted into policy. But based on what we have seen and some of the headlines we've seen coming through, some of the policies already implemented, there are some areas of thematic investing that are likely to be more impacted than others. And we've certainly seen a lot of narrative around Trump related to things like the energy transition. And he's got one particular appointment in his cabinet, RFK Jr., that's also been quite high on the headlines around healthcare. So thinking about the energy transition, renewable energy in particular has been high on Trump's agenda, and for all the wrong reasons. He's anti-wind, he wants to remove subsidies, he's been quoted as saying, drill baby, drill. So he's very much anti-renewable energy in the traditional sense. And in his first term in 2016, Trump issued orders to generate more drilling, more oil and gas. And he's done that again this time round. And he's also keen to remove the US from the Paris Climate Agreement. So we're certainly seeing some negative pressure coming on that renewable energy theme. But over time, we don't think that these policies will always drive thematic outcomes. So, for example, Biden was accused of waging a war on energy through his stance towards more renewables and being more positive on the energy transition. But in fact, during Biden's administration and his tenure, more oil and gas was drilled than at any time in US history. So we can see there is a bit of a disconnect between policy and what actually happens in the real world. And some of that is because when we think about thematic areas, many of these areas are quite long-term in nature, and so they have long-term cycles. Companies plan ahead, and that's true in particular for renewable energy. But we also see companies have got a role to play. So lots of companies plan years and years ahead in terms of where they will be deploying capital and the investments that they'll make. And even when we think about companies like Microsoft outside of the direct renewable energy set of companies, they've made commitments to use renewable energy, but they're also investing in their own energy sources. And in 2024, they signed a deal to invest more than $10 billion in renewable energy capacity for their data centers. So again, we're seeing that there is a disconnect between those headlines and between the rhetoric and what individuals and individual companies are doing. And moving on to that healthcare piece, I've mentioned RFK Jr. He's a fairly controversial character. And in healthcare, there's a few areas he looks set to target. So we're thinking about headlines focused on being anti-vax, ultra-processed food, and even putting fluoride in drinking water. But those are very specific areas of a theme that's quite broad, like healthcare. And so there are still a lot of areas that thematic investors can pivot to. So whilst we've seen the government freeze the National Institute for Health funding, and this does cause uncertainty, we think individuals will still go for health checkups, they'll take regular medications, have joint replacements and other necessary surgeries. So going back to where I started on this question, yes, there will be some areas of thematics that will be negative under this administration, but we think that it's not all negative. There are still positives, and it just takes a little bit of time to figure out where we can think to invest in a specific theme.
And Kate, since 1 month ago, since the election of Donald Trump, how have thematic funds performed under the Trump administration?
Yes, so it's been volatile out there. I'm sure you've seen that both at the stock level and at the fund level, and it's no different for thematic funds. So we've said it's not all positive, it's not all negative. And last time we spoke, we talked about how important it is to define your theme. So what is the theme so that your investor knows what they're investing in, but also that asset managers can communicate exactly what they're looking at and they define by that theme. Particularly when there are some indicators that there's more than 400 sub-themes in one framework. So that's a huge amount of dispersion in terms of what each theme contains and the types of companies that they hold. But drilling down into a couple of areas, if we take something like AI and big data that's been doing really, really well in recent years, that theme has been very attractive. Within that, in January this year, there's been a spread of performance between +2% and also -7%. That's quite a big range of about 9%. When we think of something more like transport and logistics, 8% is positive on the upside, but we've also got a bigger range there of -5%, and that's just for January. So we can see that some areas are performing well. Even within one theme, we've got quite a good range of performance. But what that highlights is, again, that opportunity to define the theme and then find those companies that will benefit from that theme. And so this political uncertainty is going to drive some of that dispersion and create quite an attractive opportunity for investors to take advantage of that volatility and dispersion.
If we see more volatility due to policy uncertainty, do you think this will support a market broadening, or do you anticipate further market concentration?
Yeah, so as I just mentioned, we have seen a lot of volatility, a lot of differences in the performance of funds, even within the same theme. Just as a data point, we've seen reports from Morningstar that during 2024, thematic ETFs had their first year of outflows. And interestingly, when we look at the areas that that's been coming from, yes, we've seen some from the climate theme, but actually quite a lot of those outflows were coming from technology. And so when we think about that market concentration that we've seen in the last couple of years, a lot of this has been coming from large mega cap tech stocks. And so if we think about those outflows from thematic ETFs, that's possibly a good indication or a good proxy that investors are starting to look elsewhere to diversify their portfolios away from that theme. And as thematic investors, the benefit for us is that we can take a longer term view. So whilst there's been short-term volatility due to that policy uncertainty, we can look through that election-related volatility. And particularly where the market's been overly pessimistic about those outcomes. So again, we're thinking about kind of healthcare, resource efficiency, renewable energy. There's a lot of opportunity there where the markets may be overreacted and been overly pessimistic. And we don't want to miss those good opportunities by thinking too much about that potential downside. But with that volatility, it is an exciting opportunity for active managers. So we can think about policy shifts, we can think about the opportunities coming from those policy shifts, and think about what's happening in the short term versus the long-term future of our theme. So yeah, we think a lot of this volatility, maybe some of the opportunities that we can look into the long term for might start to encourage investors to look away from that mega cap tech opportunity.
And Kate, in that case, where should thematic investors look for attractive opportunities now?
Yeah, so we think there are still lots of interesting areas for us to invest in, and we can pivot within themes and really try and get diversified thematic exposure. So one area that we've been particularly excited about, and we've been looking at even before the election, is this resource efficiency. So with the Trump administration expected to continue and accelerate efforts to bring manufacturing capacity back to the US, resource efficiency is really important. We've got limited resources, but they also need to contain competitive advantage over other manufacturing hubs, which have traditionally been cheaper. So it's even more important to try and be more efficient. And so one area within that we think is interesting is around industrial robotics. So thinking about companies whose data that they collect from robotics and automated processing, that can minimize waste. So we're thinking about maximizing the accuracy of output, efficient running of the machinery in terms of flagging for maintenance and repairs. That's a really exciting area. And not only will that be beneficial within the US, but in the event that reshoring manufacturing back to the US doesn't take hold and there's still manufacturing more globally, well, we can still benefit from that through supply chains benefiting from kind of nearshoring robotics and intelligent industrial equipment. So we still think there's a lot of interest within that particular theme. Infrastructure is another area that we think is particularly interesting. Again, it can cover quite a broad range of areas. So infrastructure as a theme can have a lot of verticals within it. So it can cover things like electricity, transmission pipelines, water infrastructure, data center infrastructure. And in many of these areas, there's been critical underinvestment in this crucial infrastructure. And so we see that there might be a trigger to strengthen the upcycle of investment. And we don't know exactly where this will come from, but certainly we're interested in businesses that can pivot. So we're thinking about design software that can handle infrastructure projects in data centers, but also in communications infrastructure, and thinking about firms that have got resources and individuals who can pivot to a number of different areas. So if you're an engineering business, you want disciplines from your engineers that they can pivot to areas outside of federal projects. And finally, financials is an area that we think could be potentially interesting as well. So the narrative, again, from Trump and some of the early policies that we've seen talked about have been slated to support financial markets. Some of this is suggesting that he'll roll back supervision, capital and liquidity requirements, possibly lower regulation. And this might see more M&A and set up a good opportunity for financial firms who'll benefit from this lower regulatory burden. So in summary, the administration won't be all good or bad for any particular theme. There are some that will likely benefit more than others and some that might suffer more than others. And I think this has been reflected in the diverse performance of the different thematic funds that we've seen, even within the same theme subcategory. And finally, the uncertainty and volatility that we've discussed is a good opportunity for active managers to uncover interesting opportunities that will look through this short-term volatility and and look through to the long-term development of that theme. And we think that should highlight attention away from those concentrated large cap tech names. So overall, an attractive opportunity within thematic investing.
Investment strategist at Alliance Bernstein Equities Business. Thank you very much for these keys in thematic investing, and thank you very much for being with us today.
Thank you.